Hey guys, how are you today? It's Saturday, May 30th. We're already halfway through the year here. Oh my goodness. Guys, it's been 4 months since I started this YouTube channel and we are just going straight for it. All right. So if you enjoy these videos, guys, well, it's been a pleasure making them for you and I'm going to keep making them as long as we're in the flow. So today's video, we are going to be talking about some interesting stuff. So basically, I found this article on Investopedia and it's 20 rules followed by professional traders. I found it an interesting article because it covers some of the important disciplines that are required, in fact, to trade professionally. And now everybody thinks that there's a secret approach to trading. There's a secret that you need to learn about, what the institutions are doing or how to do it a certain way, right? But when you do it long enough, and I've only been trading for about a year and 8 months at this point, and I've learned that, well, obviously, there's no secrets anywhere, of course. Everything is in plain sight, and it's just about how you are able to interpret the information that's in front of you and able to interpret the behavior of the crowd and place yourself on the right side of that trade consistently. So here we go. Talking about trading. Key takeaways. Profitable trading is difficult and successful traders share specific rare characteristics. It's estimated that more than 80% of traders fail and quit. Now, it's also estimated that more than 80% of anybody trying to do a professional thing is going to fail at least a few times before they succeed, right? Doesn't that make sense? One key success is to identify strategies that win more money than they lose. Yes, that makes absolute sense. Many traders fail because strategies fail to adapt to changing market conditions. Absolutely true as well. In the year 2019, actually 2017 to 2019, you basically could have been buying all kinds of dips and you would have been making money just selling puts on the regular, essentially. So let's talk about it here. Rule number one, stick to your discipline. Discipline can't be taught in a seminar found in expensive trading software. Traders spend thousands of dollars trying to compensate for their lack of self-control, but few realize that a long look in the mirror accomplishes the same task at a much lower price. The important lesson is that once a trader has confidence in their trading plan, they must have the discipline to stay the course, even when there are inevitable losing streaks. So that gets back to the reason why we use sample sets to trade. You don't want to be looking at a trade one at a time. And that's the mistake that a lot of traders have at first, right? They're always looking for that perfect trade. Number two, this one is very, very relevant here. Lose the crowd. Long-term profitability requires positioning ahead of or behind the crowd, but never in the crowd, because that's where predatory strategies target. Of course, stay away from chat rooms where people are less than serious and many of them have ulterior motive. That makes a lot of sense, guys. So stay away from StockTwits, stay away from these kinds of apps where you got people posting their opinions about things, because that's just going to stray your analysis. It's going to stray your opinion about the idea. So in my opinion, it's better to learn about the crowd, but don't be in the crowd. Engage your trading plan. Keep updating your trading plan. Okay, you might have 1 or 2 or 3 strategies that you trade. Keep perfecting them on a weekly basis. That's the only way you'll get better, guys. There's no secret strategy to trading, okay? Everybody knows how to buy a dip. Everybody knows how to sell a rip. Everybody knows every single strategy. It's just about how you employ them and identifying which ones are working based on what is more obvious or less obvious in the market right now and the psychology of the herd. Don't cut corners. Your competition spends hundreds of hours perfecting strategies, and you're in for a rude awakening if you expect to throw a few darts and walk away with a profit. So don't think you're getting into this game because people have told you that they're making a lot of money, okay? You don't want to be getting into this because you are feeling FOMO from watching other people make money. That is the wrong approach. If you're getting into trading, you need to know what you're getting into, and you need to take the time, like anything else, to get good at it and learn how to do it in a way that works for you. Avoid the obvious. This is pretty cool. Profits rarely come from following the majority of the crowd. When you see a perfect trade setup, it's likely that everyone else sees it as well, planting you in the crowd and setting yourself up for a failure. So actually, this is quite an interesting idea, actually. And you can make many analogies that express this idea, is that when something is just in plain sight and too obvious, generally, that signals it could be a trap. And generally, you want to stay away from what's obvious because what's obvious is meant to trap out weaker traders generally. Number 6, if you make rules for yourself, don't break them. The reason why we make rules is because our brains are good at trying to be clever about a situation, right? So you might get into a predicament and then you say, how can I get out of this? And then you start being clever and creative, right? But you don't realize that you're actually breaking your own rules that you've already set for yourself. So this is one of the more important ones about rules and breaking them. And this is why a lot of financial institutions have gone towards algorithmic trading because when you program an algorithm, it has a defined set of variables that it works off of. And if those variables are present, it executes it. Otherwise, you as an individual behind the trading desk, if you are thinking about anything else other than the variables that come together to define your edge, then you're at risk of breaking a rule or deviating from the strategy or thinking about something around the environment that could kind of distract you from the edge being actually there. So for example, let's say you have a certain trading idea that you employ. Because of the environment that it's currently existing in right now, you might look at it slightly different, right? You're trying to always look at it from a standpoint where you're trying to be more clever. And this is where algorithm versus intuition comes into play. And I think that that is the general reason why these institutions prefer to automate all of their trading strategies. And I think I'm going to be on this path pretty soon. Number 7, avoid market gurus. All right, guys. So anybody who's out there trying to sell you a course and trying to sell you, the fact that you can use their trading methods and make tons of profits, all of it is a scam. Don't even believe it for a second. Don't even waste your time, all right? If you're watching this video right now, consider yourself lucky that I make YouTube videos here for free and I talk about all kinds of crazy stuff like options trading and risk management and basically the tools you need to trade effectively, essentially. There's no secrets, guys. There is not any secrets to trading. There's no secrets to being a professional boxer or a professional musician. Anything. It's all right in front of you, and it's just up to you to do the digging yourself and figure out what is working, what is not working, learn about the psychology of the herd, and learn how to trade. That's it. 8, intuition. Trading uses the mathematical and artistic sides of the brain, so you need to cultivate both to succeed in the long run. Once you're comfortable with math, you might want to try to enhance results with meditation, a few yoga postures. Now, I don't agree with this one as much because I was just finished saying that intuition versus formula. And there's a chapter in the book, Thinking Fast and Slow, about that. I just read it yesterday. And he's talking about what's the fine line between intuition and between a formula? When is it better to trust your intuition versus an actual formula? In trading, I think it makes more sense to categorize the variables that define your edge and then just trade based on that. Don't get your intuition too involved because, again, your intuition is always going to be looking to be more clever about a situation, and markets don't care about how clever you are. Markets are trying to be efficient. Markets are based on buys and sells and supply and demand and herd psychology, all right? Number 9, don't fall in love, aka don't get attached to any specific trade. All right, if you want to learn how to trade profitably, you need to learn how to take the role of a casino, which means you're trading a number of occurrences with an edge in your favor, and over time that edge is expected to play out. Now, I know a lot of people don't want to hear this. They want to expect, that one trade, because you always hear about these amazing trades that have happened in the past where these guys net profit like $1 billion on a trade or something. It doesn't work like that, guys. If you want to make money trading consistently, you have to define an edge and execute it on a consistent basis. That's it. It's simple as that, okay? It's like the casino, basically. The casino, I say this in all my videos, I'm repeating myself. The casino is not walking around seeing that they lost on one, they lost on another, they lost on another, but over time, they're focused on their edge being executed consistently. Number 10, this one's big. Organize your personal life. All right, guys. So if your personal life is a complete mess, you shouldn't really expect to see consistent results in anything else in your business life. Absolutely, right? If you're messed up, right? If you have problems with your girlfriends, problems with your family, you probably want to be taking a break from trading, get that stuff straight, and then come back to whatever it is you were working on in the past, right? So whatever it says here, whatever's wrong in your life will eventually carry over into your trading performance. This is especially dangerous if you haven't made peace with money, wealth, magnetic polarity of abundance and scarcity. Keep your trading needs separate from your personal needs and take care of both. This is important, and I think it's important that traders or people, business people, anybody actually, if you have a profession of some sort, you need to understand the concept of having a balanced lifestyle, okay? And you could, be trading the futures 24 hours a day. You could be doing this. As long as it works within a balanced lifestyle, it's going to work. You know what I'm saying? As long as you're sticking to some kind of balanced routine that you're able to take care of your basic necessities and your head is straight and you know what it is you're doing, you have a goal, you have a process, and that's it, then you're good, right? But the thing is that when you have personal life affairs that get involved, then it starts to cloud your judgment when you come to the market. You have some other thoughts in your head that were bothering you from whatever else is going on in your life. You're approaching the market from that perspective. Therefore, you might be a victim to poor decision making because you're making decisions based from a subconscious perspective that you don't even realize is there, but it's there, and it's going to be skewing your decision making, okay? So that's why it's important to keep your life in order, especially if you're going to be trading, guys. Don't try to get even. Drawdowns are a natural part of the trader's life cycle. Accept them gracefully and stick to time-tested strategies. You know, a lot of these rules here that I'm reading, they all will get solved if you learn how to trade a sample set and how to measure your variables and then trade your sample set with no exceptions. So a lot of these ones here, these things like don't fall in love, don't try to get even, use your intuition, don't break rules, all that stuff, essentially you won't have those problems if you focus on developing a mechanical trading approach that you execute no matter what. So essentially programming an algorithm to do it for you, right? Watch for warnings. Big losses rarely occur without multiple technical warnings. Traders routinely ignore these signals and allow to hope for a place. Thoughtful discipline, setting themselves up for pain. In short, keep an eye out for early signs that market conditions are changing and creating risks to your positions. Again, that will be removed if you have a mechanical trading system. That's a problem with discretionary trading, is that if you allow yourself too much leeway to change your trade around, then you could eventually get yourself into a point where you're digging a hole, right? And you dig yourself a deeper and deeper hole. And you know, that's why I don't agree with certain strategies that people preach. Like, for example, if you're selling options and then the thing goes against you and then you have to roll it and then it goes against you and then you have to keep rolling it. And you know, that has the opportunity to set up a big snowball of a loss. And you know, obviously that's not going to happen every day. It's not going to happen every month. But when it does happen, it's going to wipe out your entire year's profits. Likely, okay? So you need to be careful with stuff like that, and that's why I'm a very firm believer in the smaller occurrences with the edge in your favor rather than one big trade at a time that you're trying to do, right? Tools don't think. Some traders try to make up for insufficient skills with expensive software prepackaged with all sorts of proprietary buy and sell signals. These tools can interfere with your valuable experiences when you think the software is smarter than you are. Use tools that fit well with your trading plan, but remember that ultimately you're the one calling the shots. Absolutely, guys. So like I was saying before, there's no secrets. There's no secrets here. I mean, yes, market makers and guys working on the exchanges, probably they have access to some more advanced technology, but at the end of the day, they're still making decisions that you're able to make. You're able to make the same decisions that they are. Therefore, there should be nothing separating you from them in terms of the decisions you're able to make in trading. So there's no like secret software. You don't have to subscribe to a crazy service to, you know, get the data you need to trade profitably. Use your head. It's natural for traders to emulate their financial heroes, but it's also a perfect way to lose money. Learn what you can from others, then back off and establish your own market identity based on your own unique skills and risk tolerance. Absolutely, guys. Everybody will think about it slightly different. So just because you're watching me, let's say you watch my videos and you like the style of trading that I employ, it doesn't necessarily mean that it's going to work for you. And I've been exploring this idea a lot, which is like, what if I share all my strategies and everything and tell you every little detail? What is the chances that everybody's going to be able to execute them like that, and then the strategy will lose its value essentially because everybody executes it? I think it's highly unlikely, because we know that in a changing environment all the time, the market's constantly changing, things work for a certain amount of time, but then they stop working anyway. So it's up to you as the individual discretionary trader. You need to be able to understand when the market is changing and adapt your strategy, of course, right? So use your head, aka do your own due diligence. Forget the holy grail. Losing traders fantasize about the secret formula that will magically improve their results. In reality, there are no secrets, because the road to success always passes through careful choice, risk management, and skilled profit taking. I just finished saying this, guys. There's no secrets about anything, okay? You know, you can try and search all you want about, you know, how these guys manage to make millions and millions of dollars doing this. At the end of the day, it's the same bare bones process that you're doing, you know? You're learning the tools necessary, but whatever it is, it might be tape reading, technical analysis, option pricing, all this stuff. But at the end of the day, it's going to be up to you to find the variables that identify your edge and focus on those variables and then execute the edge on a consistent basis. Ditch the paycheck mentality. Okay, so this is if you're used to a 9 to 5. In fact, statistics indicate that most annual profits are booked on just a handful of trading days. So this is just a state of mind in regards to getting paid. Whereas some people with a consistent job need a consistent paycheck. But the thing is, with trading or with any business venture, essentially, you're not really going to be getting a consistent paycheck. And I'm used to that. I've been doing music my whole life. So if you're used to the idea of not getting a consistent paycheck, then you should be fine with this, actually. Number 17, don't count your chickens before they hatch. It's okay to feel good about a trade that's going away, but the money isn't yours until you close out or cover the position. Absolutely, guys. So if you're looking at your profit or loss before the trade's even closed, that's not healthy because you're letting it get to your head. Let's say you're in the process of sizing up your positions and you're always stuck looking at your profits and losses. That's going to mess with your process. That's why I think it's so important to trade small until you've nailed the process. And then once you have a process that works for you on a consistent basis, then you can start to size it up slowly. The process itself doesn't change because you've ingrained that mechanical process to the point where it became a habit. And we all know that humans are creatures of habits. And once you have the habit built strongly enough, then you can start to size up the position, right? And that will hopefully limit the amount of emotional effect that sizing up will have on you, of course. Embrace simplicity. Focus on price action, understanding that everything else is secondary. Go ahead and build complex technical indicators while keeping in mind that their primary function is to confirm or refute what your eye already sees, guys. So again, embrace simplicity. So yeah, I think it's important. A new trader needs to understand the tools available to him, right? So you need to learn about your trading platform. You need to learn about all kinds of different indicators. And then once you've learned about them, you need to throw them all out the garbage and focus on the ones that are actually giving you the most vital information you need. So for me, I've been trading for about 1 year and 8 months at this point, and I've tried a whole bunch of different things. And at this point, I really use like maybe 3 indicators. And those for me work, so I continue to use them, and that's it, right? 19, make peace with losses. Well, yeah, absolutely. I mean, like I was saying before, the casino is not focused on the 3 or 4 losses they might have. They're focused on the amount of win to losses percentage returns over a series of 20 or more occurrences. So make peace with losses. Yes, absolutely. Losing money every day is a natural path to success. So as humans, there's 2 things we hate. Number 1 is losing something, and number 2 is being wrong. And in trading, you need to learn how to do both those things. And that's why, again, getting back to having a mechanical process, that's going to likely solve that problem for you. So you're going to be able to ignore those losses and focus on the bigger picture. Beware of reinforcement. Active trading releases adrenaline and endorphins. These chemicals can produce feelings of euphoria even when you're losing money. In turn, this encourages addictive personalities to take bad positions just to get the rush. If you're trading to achieve a rush and excitement, you're probably trading for the wrong reasons. So look, if you've watched this video to this point right now and you've been listening to what I've been saying, this is no surprise that the majority of people getting into trading are trading for the wrong reasons to begin with. They do not know what they're getting into, okay? So if you've watched the video up until this point, you probably are in the small percentage of people who are trying to potentially get out of that mentality of trading emotionally and trading impulsively. You know, if you're trading to get a rush and excitement, then you're trading for the wrong reasons, guys. You know, the most professional traders out there, they don't care about the rush and excitement. They just care about the consistency of the affair they're involved in, right? They're in this to make money. They're not in this to get a rush. Bottom line, most traders fail to tap their full potential, eventually cashing in their chips and finding more traditional ways to make money. Become a proud member of the professional minority by following classic rules designed to keep a razor-sharp focus on probability, on profitability. So there you have it, guys. There's 20 rules that professional traders follow. I don't agree with all of them, as you can see, and a lot of these points that were made here can easily be fixed if you just follow a mechanical process where you're able to quantify the variables that define your edge and then execute your edge on a consistent basis and not try to be too clever about understanding the environment that your edge is existing in or how it could be affected differently based on the psychology of something, right? You know, you want to be able to quantify that edge and execute the edge and measure the edge, and that's about it. There's nothing more complicated than that. It's simplicity is key. You see flamingos in the back? Their simplicity is key, man. All right, if you enjoyed the video, take care. I'll see you guys in the next video. Bye.